So we have a security concern really, right, with bridges, and we have a scalability concern with blockchain. Arkade eliminates both of these. Arkade kind of like offers probably one of the best trade-off out there in terms of security, convenience, and usability. There's always been an appetite to get Bitcoin to this state where it's also able to have credit markets available, everything from loans, from AMMs, the type of things that you'd find on Ethereum, we're able to closely replicate. And I hope the Maxis are not going to hear this, but
This episode of Supply Shock is brought to you by Ledn, a proud Bitcoin-only company and the global leader in Bitcoin-backed lending. Need cash but don't want to sell down your Bitcoin stack? Ledn has a trusted track record in providing liquidity. That's Ledn. You'll hear more about them later in this episode. As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research. Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions the company sponsors or projects discussed. Hey everybody, Pete Rizzo, the Bitcoin historian here, welcoming you to the latest episode of Supply Shock. We've got a great episode today with Alex B., head of growth at Ark Labs, building one of the most exciting products in Bitcoin right now, Arkade, soon to be out on mainnet, but a product that stands poised to disrupt some of the Bitcoin and crypto balance, potentially bringing some crypto builders back into the Bitcoin space. Before we begin, brief introduction to Alex, contributor to organizations like Blockstream, as well as Bitcoin Magazine, and a longtime contributor to the space. You can follow him on X and other places. Alex, welcome to the show.
Thanks, Pete. Good to have you. Good to be on there with you. And you've done a pretty good job, I think, of laying out the resume here. So yeah, I'll just focus on what I've been spending my time on for almost a full year now, which indeed is this new scaling protocol, Arkade. So we actually just announced, pretty much just announced Arkade over at the Bitcoin Vegas conference.
Maybe let's back up for a second for people and just say, for people who are listening to the show, maybe coming from a Bitcoin crowd or crypto crowd, they've heard about Ark, maybe just high level. Ark is a new protocol being built on Bitcoin, bit of an L2, but also a bit of its own thing. Maybe let's just start high level. What's Ark?
Yeah, well, I mean, I can give start with a little short story maybe of Ark and how it came about. So it was released or kind of like announced a couple of years ago, really, as I would call it a bit of a design more so than an implementation. And it was a little rough around the edges. And the original announcement also kind of involved the notion that it would require things like covenants or things like changes to Bitcoin in terms of soft fork. And so we believe that this was part of the reason why it was originally kind of dismissed by, I think, the majority mindshare in the ecosystem as something that probably didn't look like it was going to happen or materialize anytime soon, given the current context and conversation, even back then 2 years ago, and arguably currently now. But some advances and sort of like further research contribution by a couple of people made it viable without any change to Bitcoin. And so it was effectively around the same time last year that the guys over at Vulpin Venture were originally builders on the Blockstream's Liquid sidechain, started taking an interest and actually starting working on an early implementation of Ark. One of them on the Liquid sidechain, but one of them very quickly also kind of like putting the entire focus on the current on-chain implementation and just, laying out the foundation and making sure that no additional pieces were needed. And there's been tremendous progress from that perspective, and also kind of a very, I think, important evolution in, I think, the common understanding of Ark. And this is why obviously not a lot of us are kind of like terminally online and I have really kept up with this. So there's kind of still a bit of preconceived idea around Ark that need to be clarified and demystified. But all that to say is that the status now is, as you've mentioned, we're getting ready to unveil Ark to mainnet in the next couple of months, going to start in a private capacity. Ark basically is a protocol that allows for effectively what we refer to as transaction batching, which is generally the ability to commit a large number of changes to transaction to say off-chain balances into a single Bitcoin transaction output. And again, providing every participant in this sort of like batch output with a unilateral exit path where they continue to have full control, full self custody over their balance, but then are able to execute off chain transfers. And in the future, we hope are able to do more extensive programmable flows with their money, which leads us to Arkade today.
Right. Yeah. Maybe let's kind of talk about the holy grails here, which is that programmability and scripting. Right. I think most people out there in the crypto world know that Bitcoin has native script limitations for a variety of reasons. A lot of this was kind of security of Bitcoin early on. For a long time, other cryptocurrencies kind of purported to solve that by, building new blockchains with new scripting languages. Of course, Ethereum, famous for the EVM and Solidity and things like that. So, how does Arc get us to something like programmability and scripting with Bitcoin, because that's been a holy grail for a long time? They call it the hodler's dilemma. Ever wish you could get access to cash without selling down your stack? Well, Ledn makes that possible. Since 2018, Ledn has issued over $9 billion worth of Bitcoin backed loans, and they haven't lost a single Satoshi of client funds in the process. There are no credit checks. You can get funds in under 12 hours and repay whenever you want with zero penalties. Unlike others, Ledn doesn't lend out your collateral. They even publish biannual proof of reserves verified by top auditors in the blockchain. You can learn more at ledn.io. That's LEDN.io. As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
Yeah, well, the neat trick that we use is kind of like what we refer to as emulating, which is basically we created an environment where using the core foundation of the Ark protocol, we create this off-chain environment that's a little familiar in a way, or resembles almost what rollups are. So rollups are popular, very popular scaling solution on things like Ethereum. And the way that rollups work really is, again, it execute off-chain transactions and periodically create sort of a checkpoint on chain on the main layer one that kind of inscribes, if you will, or commit, if you will, the balances of all of the off-chain users onto the L1, giving them so like finality guarantees that you would expect out of just using normally the layer one. Now, the decision that we've taken with Arkade, once we sort of rounded up all of these concepts and realized that the Ark protocol applied very well to this mechanism, well, we decided to extend the normal regular payment transfer capabilities of Ark into what we call Arkade Script, which is eventually its own version of a virtual machine. What's different with Arkade Script as a virtual machine than the Ethereum virtual machine is that we preserve the Bitcoin UTXO model. And we think that's very important for a large number of reasons. Some of them are a little too technical, perhaps, for a general mainstream audience. But the interesting thing is it really introduces a unique scaling pathway that wasn't available before, where we've seen a whole crop of new Bitcoin layer 2 solutions and side chains that effectively are kind of like feel like a little bit of a reheated copycats of Ethereum, where they have some sort of bridge mechanism, and that bridge allows users to move their Bitcoin onto this different layer being effectively another blockchain, and that blockchain supporting Ethereum style smart contracts and the Ethereum virtual machine. Whereas the design that we've taken with Arkade Script, the virtual machine, and what we call the virtual mempool is that we don't actually require the use of a bridge. And bridges are notoriously kind of insecure. They're probably the largest amount of coins that's been lost really in all of the DeFi and Web3 ecosystem over the last 5+ years has been because of compromises of bridge, very sophisticated attacks by North Korea notably, where they're able to affect, because bridges in most cases rely on some sort of multi-sig threshold system where the moment you start having access or compromising a couple of independent actors that have access to those keys, then you're able to kind of wholesale steal the entire lot of money that's committed by users So we think that this approach has been kind of like notoriously, again, like I said, insecure and proven very difficult and complex to implement. You look at things like BitVM, where attempting to do something similar on Bitcoin, and still to this day, there's a lot of iteration, there's a lot of research that is ongoing about different techniques required to kind of like strike the right balance of security and economic and efficiency with BitVM. Whereas something like Arkade requires no sort of like fancy zero knowledge proofs, and all kinds of like this exoteric almost cryptography that these other systems use. We basically use very conventional pre-signed transactions. We use the Taproot upgrade that made it to Bitcoin a couple of years ago, and we use that to kind of create conditional spending pathways between a server and the clients, and everyone connects in kind of like a hub and spoke manner to this server, this operator, and this allows you again to have a unilateral spending exit. So closely resembles the security model of Lightning, where you have no third-party dependence on your ability to claim your money on chain. But it also allows for collaborative spending path, where using the operator as kind of like the intermediary between yourself and every other user in that system are able again to execute these off-chain operations. And to tie the loop here, well, Arkade Script is our opportunity to kind of use basic Bitcoin script fundamentals, but because we are not bound by on-chain consensus in this off-chain model, actually introduce opcodes and changes to Bitcoin that a lot of people have been clamoring for years, really, and therefore we're able to do things like covenant and introduce things like introspection and more complex or like mathematical structure where we unlock the ability to use UTXOs in a Bitcoin kind of like transaction syntax way, but in a much more powerful, where everything from loans, from AMMs, the type of things that you'd find on Ethereum, we're able to closely replicate while preserving sort of like the self custody guarantees that Bitcoin typically offers.
So let me back this up and see if I can kind of follow the sequence here for the people at home. So with Lightning, we went to payment channels. Two people lock funds, they pass funds back and forth. You can run that around the network. They all have unilateral exit. With Ark, we migrated to this idea, again, not implemented, that people can participate in these channels, but have sort of a server operator that kind of expands the capabilities of that. And Arkade sort of adds this component of the scripting, or actually a scripting element, an opcode element, to these channels that Ark provides. Is that a rough summary?
That's roughly a fair summary, indeed. I mean, I would note that they're not exactly channels that are opened in the same way that Lightning channels exist between the Arkade. But we've seen how also it's interesting to look at how Lightning has evolved itself. Right, the original idea was to connecting every single user in the system through this intricate kind of like architecture, where everyone would have a channel with a bunch of counterparty. And we realized very quickly that this didn't scale. This led to the emergence of Lightning Service Provider. And so therefore, again, kind of like a hub and spoke model, where a bunch of different users all connect to the same Lightning Service Provider. And that Lightning Service Provider is able to route payment across the Lightning network. And so in a way, this is also what kind of inspired the Ark and eventually the Arkade infrastructure as well. Why don't we kind of like leverage this ability to create this client server model? We simplify it a little bit so we don't have to use channels. We use an architecture that Arkade very closely in Ark very closely resembles how Bitcoin transaction, actually it's effectively the same, how Bitcoin transaction are actually performed on chain, right? So you have a set of UTXOs. In Ark and Arkade, you have a set of virtual UTXOs. If you want to send money to someone, you use one of these UTXOs as an input to the transaction. And so I think everything works in the same way, and it becomes very easy also for developers to familiarize themselves with the environment, because it's closely resembles on chain. It's a lot more simple than Lightning. And then yes, Arkade is kind of like this, what we've called also this superset on top of Ark, where it's like, okay, now that we have this model, how can we truly push it to its limit where we're not only creating a system to move money around and to settle money and to make payments, but what is the biggest appetite out there? And we believe that probably, the hallmark of this the cycle really seems to be like Bitcoin capital markets in general, right? So how do we unlock that in a Bitcoin native way where we foresee that, as you mentioned early on, there's going to be an appetite to get Bitcoin. There's always been an appetite to get Bitcoin to this state where it's also able to have credit markets available, have the ability to, for example, swap your BTC for US for Tether in a way that doesn't require you trusting some other chain. And so we're getting there much closer and much more quickly than we really anticipated. And we feel that, again, Arkade kind of like offers probably one of the best trade-off out there in terms of security, convenience, and usability. So it's going to be exciting to see how it really develops.
Right. I was going to ask from a crypto perspective, right? There's been a lot of attempts from the Bitcoin community to kind of make overtures to the crypto crowd over the years and say, hey, come build what you're doing on Bitcoin. And Bitcoin has the more lasting infrastructure. It is a more lasting asset. I'll maybe go through them chronologically. There was Liquid with Blockstream, which you participated in, which was kind of an early sidechains iteration. There was Rootstock, which is still around today. We're essentially replicating the EVM and seeking to get EVM apps over to Bitcoin. From there, I think we've seen now a revival in BitVM, kind of popularizing this a couple of years ago, with this idea that we could have one of n structures.
One of them, yeah.
Yeah, people can withdraw, and there's a less trusted, if not trustless, environment. I guess why is Ark? Where do you think that Ark is kind of the one that could really stick, actually bring apps over to Bitcoin?
I mean, I think where it really stands out again is what I brought up earlier, which is you look at all of these models, and all of these are fundamentally based on this idea that one, you require a bridge to interface between, Bitcoin layer one and this other, and two, you require effectively what is another blockchain, right? You have another system that requires what we refer to as a global state, where a set of nodes, effectively a set of validators, at least some set of people in this structure needs to keep a copy of all of the data, of all of the account balances, and the money that people have entrusted to that system. And the issue that we've run into, and it seems like some people have different ideas in the wider Web3 landscape, but it seems inescapable that blockchain run into scaling difficulties because of that requirement to really kind of hold all of that data and make it available to whoever needs it to, for example, be able to go back to the layer one, right? So we have a security concern really, right, with bridges, and we have a scalability concern with blockchain. Arkade eliminates both of these in the sense that the the way that people move their Bitcoin to to the Arkade off-chain environment is simply by committing to the layer one a pre-signed transaction in an Arkade batch, and that pre-signed transaction, as I said earlier, gives them two spending paths. One that's collaborative so like the optimistic um, model where everything works fine. The operator is always online and facilitates the transactions between everyone in the off-chain system. But the most importantly, it has the unilateral spending path, and so it doesn't require a bridge or some sort of like authorization from third parties in order to get your money back, because ultimately all of these bridge-based systems, even if they're not compromised or whatnot, or there's also sort of things that could happen where it's an implementation bug. There's a bug in the cryptography, and there was some issue somewhere. But the issue ultimately is, at the end of the day, is that it only requires one mistake for everyone in this entire layer two to lose all of their money. Now, not to say that Arkade, is perfectly trustless in all scenarios. It definitely isn't. There are different sort of execution and transaction flows in the off-chain environment where there's a bit of a dependency on the operator. But what remains important always is that the user preserves the unilateral spending path. And not only that, the operator, even if he were to attempt to sort of like, you know, compromise some of the user's funds and whatnot, is quite simply unable to kind of wholesale, rug the entire system. It would require kind of very high effort and very intricate um, kind of schemes for him to be able to target specific users and potentially be able to withdraw their balance on chain. And so we think that the trust trade-off and the security trade-off of Arkade is far superior for that reason. And again, the second element is that because we do not require a different blockchain, so everything that happens in this off-chain environment happens within what we call the virtual mempool. And the virtual mempool, again, is not this construction where everyone needs to be aware at all time of what exactly is happening, meaning that there's no data availability problem. There's no need for validators or node to kind of like save all of the information, all of the data, like people need to on Bitcoin layer one, or people need to on really realistically every blockchain based scaling solution. And what this creates is actually a very high performance sort of platform where it's only a question of having co-signing architecture. And so we also expect that something like Arkade is going to be realistically the only sort of platform that is able to satisfy the high throughput demand that the current sort of industry seems to be heading into, right? Because everything seems to be a race to the bottom at the moment in terms of the ability to have fast execution and the ability to kind of have very, very high throughput. You can see all of these other scaling solutions all advertise trying to like one up each other with like 100,000 transactions per second and all of that jazz, right? And really the issue that they kind of like sleight of hand that they really don't talk about too much is again the fact that all that data actually needs to be preserved, whereas because we're using the UTXO model, um, all of the data is what we call it is not a global state, is a local state. So the only data that's relevant to every single user is their own set of virtual UTXOs, and they deal with that with the operator. Sure, the operator needs to have an overview of the existing virtual UTXO set with whom he has relation with all of the other users, but the operator is expected to run a database, and the fact that we don't have to pretend to have some sort of decentralized validating network means that we can actually leverage all of the efficiency of what is effectively centralization. But the architecture that we've put in place makes it so that even though a single operator might be the counterparty that sort of like makes everything run smoothly, the ability for the operator to compromise the system or its users is actually comparatively much stronger, much more defensible than every other scaling solution out there.
Maybe I'll pose this question this way. I think the last kind of cycle of Bitcoin, there was this mental model of, you'll remember this, BTC/LN, right? This idea that the Bitcoin protocol was sort of mature and there was sort of two parts, right? There was Bitcoin native and there was Lightning Network. Where do you see Ark fitting into that? Obviously, it seems like you're suggesting that this would change that models pretty significantly, right? Because it would open up a world where there's another kind of protocol that would handle some sort of volume or activity that Lightning is not purely encompassing. So maybe you can kind of define the activity that way.
First off, like we anticipate Ark and Arkade to be kind of like probably the best thing that's happened to Lightning ever since Lightning was created, because the both systems are very complementary, and both systems have very distinct set of use cases that one cannot offer as good as the other does, right? And this is also one of the unfortunate thing with the original promotion of Ark when it was first released and promoted as kind of like this competitor to Lightning, this alternative to Lightning with a heavy focus on payments. And so while fast forward to today, what we're realizing first off is it is true, and so a lot of the critics of Lightning were absolutely correct that Lightning is most likely not an appropriate solution, at least within the architecture that was prescribed for retail payment adoption. And what I mean by that is that it is very, very unlikely that the sort of billions of users that will be coming online in the next decade are going to have Lightning channels, much less Lightning nodes, kind of controlling and operating channels with different counterparties, even if there's counterparties are Lightning service providers. There are technical reasons why that is um, not only not feasible, but most likely unsustainable. But there's also very strong economic reason why it's not actually desirable. And so the way that we've seen Lightning evolve, and really I think it's taking a strong footing here, is kind of like Lightning being this, Roy at Dries calls it the kind of like the lingua franca of Bitcoin adjacent protocols, right? Lightning kind of like becomes this overlay network that it's much more akin to what what Swift was or is than Visa. And so you have all kinds of different companies and other protocols that are emerging. I saw an announcement just yesterday that Botanics, who released the Spider Chain protocol, and one of the feature that they advertise is Lightning compatibility, because it makes a lot of sense because Lightning provides kind of like this payment um, infrastructure where everyone can kind of like create invoices and request payment using a universal protocol. And then the way that you fulfill these payments, then that'll be unique to whatever other kind of like last mile solution users might use. And we absolutely obviously believe that Arkade is going to be a very strongly positioned to be able to do that because the user experience that you provide, at least strictly for payments, is something that closely resembles Moon Wallet. And Moon Wallet is, has been very famous since like the early Lightning days, and surprisingly enough, really still has a massive audience,
So
especially.
actually, use room wall.
Yeah, no, exactly, because it's just
Yeah.
a great, fantastic,
Yeah.
one balance user experience. And in times where, yes, in times where the mempool is, pretty quiet and the on-chain fees are not so expensive, it just works, right? Because you're never having to deal with this liquidity, with buying liquidity and all of that. There's no surprises. Um, and the reason why that is so is they
I
use
find it like
this sort of.
impossible to use another Lightning wallet.
Well, I mean, credit to a lot of people that have tried to create great Lightning experience, and there's with people like Phoenix and whatnot out there, but there's still aspects to a lot of these wallets that just seems like it won't scale to a global audience. You're not going to be able to, invite someone to use an application where it requests them to kind of like pre-fund some like liquidity subscription and whatnot. It just seems counterintuitive and not very accessible to people. And so, something like Moon works very simply because what it does is you have an on-chain balance and it just swaps in and out of Lightning. So it doesn't actually you don't have a channel. You just pay a Lightning service provider to effectively pay the invoice for you, and you pay them on chain, and they make the Lightning payment. The issue with that model, obviously, is that again, in times where on-chain becomes congested and the fees start getting high, the whole thing breaks down because you just cannot avoid the on-chain fees, and therefore it becomes prohibitively expensive to actually make Lightning outbound payments. And so the reason why we think Arkade will be such a strong suit for this type of model, really trying to actually eventually make Moon great again, is that it allows the same construct, the same dynamic, but in a way that isn't constrained by the on-chain block space, right? And therefore, it allows the exact same user experience of swapping in and out of Lightning, whether it's receiving payment or sending payment, but in a way that's completely seamless and in a way that doesn't compromise user self-custody as well. So we think that's one strong path forward, and we're looking forward to be able to do that. But obviously, the one place where Lightning also is fairly limited, as you mentioned, is kind of like the programmability aspect, where sure, Lightning is strong. Lightning is the only thing in the entire Web3 industry, blockchain, whatever you want to call it, that offers immediate settlement, instant settlement. There's no existing infrastructure out there that competes with Lightning at this scale. So it really is a marvel of engineering, and I think it doesn't get enough dues paid. But obviously, probably because of misplaced expectations. But certainly, at the end of the day, all it can do is move Bitcoin around, make payments, settle payments, and whatnot. And so that's why Ark becomes a complement to it, because it really unlocks the desire for people to make more elaborate contracts. And DeFi, unfortunately, kind of like has been wrongly associated with all kinds of scams and very unfortunate stories over the year. But ultimately, there are very valuable use cases, and one of the most probably popular one at the moment is kind of like Bitcoin lending and borrowing, right? And this ability to leverage the existing Bitcoin capital, because this is really the underlying trend that we're seeing in the market, right? We've created an economy that's over $2 trillion in value today. We're clearly like past the early speculation phase, if you're asking me, and we're kind of like entering this new realm where we've created capital markets that are huge, and these people have an appetite to be able to deploy that capital while remaining in a Bitcoin denominated environment, right? And so a lot of these people, for various tax reasons, for various security reasons, don't want to have to send their Bitcoin to a centralized custodian or a more centralized blockchain to be able to do things such as, we're not talking about some kind of YOLO 10,000% APR scheme. No, we're simply talking about the ability to hedge your position, for example. And for a lot of people, at least the regular sort of plebs, if you will, perhaps that doesn't sound desirable. But when you're managing 100 millions of dollars in Bitcoin, certainly when you feel like there's going to be some sort of market downturn, you want to have the ability to tap into some financial tools and contracts and products that will allow you to kind of like hedge your position there, right? You want to use the ability to use your existing capital, perhaps to be able to make purchases in the real world without having to sell your Bitcoin, and that's why Bitcoin denominated loans are such a hit at the moment. So there's kind of like a plethora of like really fundamental, very basic financial use cases that people need, that want to tap into. And this is where kind of something like Arkade really comes in and complements, if you will, the trifecta of Arkade, Lightning, and Bitcoin on chain.
Yeah, I was gonna say, just at the permissionless conference in Brooklyn, New York, a lot of excitement there about obviously like lending and kind of financial primitives in crypto still, but a very big Bitcoin track. I'd say about a quarter of the content was probably devoted to that this year. So a lot of people who are actually thinking of bringing their products, existing crypto products, over to Bitcoin, maybe the first time. Part of that's the price appreciation. Obviously, Bitcoin is now kind of doing much more. 7 times larger than Ethereum and 60% of the total market. Are you thinking about getting app builders to switch in the competition there? Because obviously a lot of the sponsors there kind of have either BitVM or kind of interesting side chains or products like Spider Chain. Are you competing against these different protocols for apps? Let's take a quick break to talk about today's sponsor, Ledn, the most trusted name in Bitcoin-backed lending. Look, if you're like me, you never really want to think about selling your Bitcoin. Ledn has a solution. You can borrow against your Bitcoin. No credit checks, no monthly payments, no hidden fees. You can get your cash in under 12 hours and pay back when you want with 0 penalties. Unlike other platforms, Ledn has a history of transparency. They prove it with independent proof of reserves audits every 6 months on the blockchain. In total, they've issued more than $9 billion in loans without losing a single satoshi of client funds. That's the kind of track record you want when it comes to securing your Bitcoin. You can learn more. Visit ledn.io. That's ledn.io. As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
Well, I think in a way we are definitely. There's certainly some work cut out for us in terms of attracting and creating a new mind share of builders that is more Bitcoin native, but also that recognizes the potential of Arcade as a unique solution in the market. And so this is part of my role at Ark Labs is going to kind of like um, get attention from this specific crowd. And so I've been telling to a lot of people, like we're certainly building for Bitcoiner, and I think that the first thing that we're going to be able to have a material impact on is the average Bitcoin user experience, whether it is from the perspective of having access to great, reliable, self-custodial Lightning wallets. But in the long run, our eyes are definitely set on the wider market out there, where we're going to want to have a presence. Where we're trying to see how we can leverage the know-how of, because at the end of the day, sure, you might disagree with some of the technology choice that a lot of these developers have taken to implement a lot of these ideas, but there's a wealth of experience and expertise out there in actually creating, what are fundamentally financial structures, right? And so then it becomes kind of a question of, yeah, sure, what technology platform are you implementing that with? And we think we're going to be able to make a strong case for why Arcade really stands out. And um, one of the parties who I think is going to be very receptive to this pitch is mostly institutions, because I believe that the pre-signing sort of very conventional technology backdrop that Arcade provides is going to create a much more sort of verifiable and auditable set of tools for these institutions who do not necessarily want to have a sort of like zero knowledge expert on board to be able to audit these contracts and make sure that everything works out fine. We really think that so there's this idea of formal verification, right, in software, where the simpler your system is, the easier it is to create almost like mathematical proofs that everything is going to work out as expected in a reliable way. And so we think that for a lot of these future, perhaps Bitcoin treasury companies or all of these new sort of nouveau banking institutions that support Bitcoin-based product, it's going to be very interesting to make the comparison with everything that involves, like I said, more esoteric or exotic technology that perhaps relies on, again, cryptography that hasn't yet really stood the test of time. Whereas everything that we use is kind of like very, very, it takes someone that's a little bit technologically capable, but is much more accessible to be understood and to create a proper framework of security and guarantees, which is what I think at the end of the day, we expect obviously new entities and new players to come into the game, but it's to be expected that the existing incumbents are going to make a strong push to have their own seat at the table. And we think that guys like that who have existing systems of SOC 2 type of audits and whatnot, where everything has to be very well laid out. We think generally, even if not Arcade, generally the Bitcoin technology fundamentals lay itself much more favorably to these kind of structures than other platforms.
I want to bring in a couple subjects we haven't really talked about that are sort of in the news cycle now as it relates to kind of Bitcoin and some of the larger exchanges and ecosystems in the space, right? So we've seen a couple exchanges, start to be more progressive with how they're thinking about Bitcoin, specifically Kraken listing Bitcoin native assets kind of on Runes protocol and things like that, doing Babylon staking, so trying to get yield for their users on Bitcoin, with that kind of product. Also doing tokenized stocks, so essentially using crypto infrastructure to in the case of Gemini, actually launch trading of master MicroStrategy shares. So this is like a share of a company that's buying Bitcoin, but it's tokenized on a blockchain that isn't Bitcoin and then traded within the Gemini infrastructure. It's still unclear to me how compatible all of these kind of universes are. What are your thoughts on what we're seeing there? Because it does seem like the financialization of Bitcoin, the ways you were talking about, is now kind of taking place on, in some cases, like other chains, in some cases, sort of these existing Bitcoin solutions. Just how do you see that kind of topological landscape?
Yeah, I think it was always inevitable that all of these exchanges who, typically would solely offer Bitcoin brokerage and maybe trading would eventually develop into full-fledged financial service providers, right? Right now, I think, everything is still in the discovery phase. And certainly from the perspective of Bitcoin, well, the technology is not quite available for them to kind of like leverage and deploy something that is more, if you will, native to Bitcoin. But yeah, I mean, it's a brave new world out there. Like, I opened my, and I hope the Maxis are not going to hear this, but I opened my Phantom app the other day and I realized that I was able to swap, Solana with for NVIDIA stocks on the, I believe Kraken is the one offering that token at the moment. So it's hard to project exactly the repercussions that this is going to have on the wider market. I know that in a way, it feels probably one player that I think is interesting from that perspective is Blockstream because it feels like it's a bit of a vindication of the Blockstream thesis, which have for a long time tried to create capital markets around Bitcoin, creating structured products like their Bitcoin mining nodes and also opening up kind of like the market on a liquid blockchain, on a liquid side chain to privatize European stocks and stuff that's a little more obscure than the mainstream stuff that you're seeing. And certainly, they've had challenges in terms of execution and distribution. But it really feels like this is where the game is headed. And I think from that perspective, you always got to be cognizant of like what are the real benefits that you're actually getting from being able to trade it. Are you only getting? It seems like at least for now, it's only a question of getting price exposure to a lot of these things, right? Because you're certainly not getting any sort of like formal claimable property rights in the same way that you would if you would truly own a stock in your brokerage account.
That even OpenAI coming out and
Open.
saying Robinhood's tokenized stocks are not are not authorized.
Exactly. So, I mean, certainly on Arkade, I haven't brought that up, but we certainly have plans to support native assets or even really pretty agnostic in terms of assets. So, one of the one that we're currently hoping materializes pretty soon is Tether support via the Taproot Asset Protocol from Lightning Labs. We did a proof of concept on that a couple of months ago and validated that this protocol not only could be used to bring assets to Lightning, but also could be used to bring asset to Arkade. And so that's going to be an interesting. I think this is kind of like a very underestimated market. Like the market there are hundreds of millions of dollars right now in like Ethereum based protocol liquidity pools, only for people to be able to swap in and out of these wrapped version of Bitcoin and into Tether. So there's massive demand to be able to do that. And so for people and large capital managers to be able to do that in a way that doesn't compromise self custody, like wrapped Bitcoin products, WBTC or Coinbase CBBTC, I think it's going to be a major deal, although it appears very simple. So yes, the issuance of assets, the real world assets, RWA narrative is massive right now. Everyone's kind of trying to figure out what the strategy is going to be is going to be for them. Something that we think is interesting from our perspective is synthetic asset perhaps, and the ability to provide if all that people want is price exposure. Well, there's certainly an opportunity to create what are effectively synthetic assets, where it's just a derivative that is based off of some collateral, probably in Bitcoin, that is locked and is able to track the price of NVIDIA shares or Tesla shares and whatnot. But yeah, so I mean, generally overall, I think everyone is in a discovery phase. Some people some of the incumbents that are trying to rush that to the market, probably because they feel pressure to kind of like act on this trend, are having to make technology decisions that are perhaps a little premature. they probably have the resources and allocate, uh, resources and capital to be able to make a pivot whenever they want. So, to anyone that's interested in kind of like partaking in this little thing right now, I would certainly probably advise caution. But generally, again, like I said, we're entering the era of capital markets. And I think it's essential and it's a stepping stone to Bitcoin truly sort of like manifesting itself as what we all expected it originally to be, which is money, right? And I think we had kind of like this false kind of dilemma in between, or the conversation that's been around whether Bitcoin is a for value, a medium of exchange. And I think it's more sort of a spectrum, and it's sort of like perhaps something that evolves around time. And I think the missing piece in between those sort of like this duality was really like the emergence of Bitcoin based capital markets that are going to create the financial infrastructure which ultimately allows users to basically if they need to hedge themselves against currency fluctuations and whatnot, and really, really create again, so like what we need for Bitcoin to truly be a reliable method for payment. And until then, it might be a market that's majorly dominated by stablecoin because ultimately this is what people demand globally. But this infrastructure that we're creating that is going to unlock and generate more network effect and liquidity and capital around Bitcoin ultimately is going to be used with the emergence of trusted institutions, right? And when I say trusted institution, I don't necessarily mean custodial institutions. Sure, there'll be plenty of those because they're not going away, right? But there's also going to be hybrid models, right? Where yes, some people might be deploying their infrastructure on something like Arkade, where you have a more semi-transient trust models where you can, you can trade for something, say Kraken or Gemini was to be able to deploy an order book on something like Arkade. Well, then what would happen is you would log in for your morning trading session, you would make a couple of trades and whatnot. And then once you're done, what you do is you commit all of your trades into a new Arkade batch. And what this effectively does is it settles all of your, you know, off-chain activity on chain, and therefore gives you full Bitcoin finality, right? So there are these different trust models that I think new financial institutions are going to be able to be used in escrow capacity. It's funny. I was actually watching a 2012, and perhaps you remember that, but a 2012 video of Mike Hearn in London, giving a very, very, very interesting, and I think
For the smart
really
contract.
forward. Exactly. He was making a strong case for how, and even brought up, and sometimes you kind of hate when people do that, but brought up a Satoshi quote, which specifically says, I've created I don't remember exactly what it was, but the system is built in mind with potential to support things like escrow and more evolved contracts and whatnot. And ultimately, we realized along the way between 2012 to 2025 today that those things couldn't reasonably happen on chain at scale while preserving Bitcoin's decentralization. But I think we're getting to a place where we're really able to fulfill those promises and really, I think, usher in kind of like this new era for Bitcoin, which is going to precede this sort of like hyper Bitcoinization probably, but is going to be, like I said, a stepping stone to it.
Fascinating stuff, Alex. Where can people find out more about what you're building with Arkade and with just Ark generally?
Sure. Well, obviously, our website is at Arkade OS, the Arkade operating system. So arkadeos.com. The X is probably the easiest place to find me at BERGE Alex 4. Ark Labs is at Ark Labs HQ. And yeah, most of our presence is on socials, obviously, but the website will give you links to all of these on Telegram as well. So yeah, we're looking forward to chatting with builders mostly, and people that are kind of like really interested in unlocking this era of programmability for Bitcoin.
Well, appreciate the time, Alex. Of course, if you want to join us, permissionless now in the books, but Digital Asset Summit London coming up in this October. I'll be there bringing a Bitcoin perspective to panels on all that is current in crypto and crypto assets. Once again, Pete Rizzo, the Bitcoin historian on X. This has been Supply Shock, a Blockworks podcast.